ETFs for the rest of us. ETF stands for Exchange Traded Funds. I think the average investor is not very familiar with ETFs. Mutual funds are much more common. You see them a lot more in the 401ks, 403bs, in a lot of different investment portfolios. But the ETFs are a really great investment product, and I would recommend that more people do some research and ask their advisor if you are working with someone about ETFs, because they definitely have a lot of positive attributes. But what is an ETF? Okay, so an ETF basically follows what we call an index. Now, a market index, the most popular ones, I'm sure, if you're watching this video, I'm sure you've heard of the S&P 500 and the Dow Jones. So that's an index, all right? But there's also bond indexes and alternative market indexes. So an ETF, an exchange traded fund, basically mimics, or at least tries to, an index. So, well, what's the difference between a mutual fund and an ETF? Great question. The ETF, it has some aspects of a stock and it has some aspects of a mutual fund. It's almost like the best between the two. The ETF is basically similar to the mutual fund in the sense it's a basket of stuff, follows the index, but it's also like a stock in the sense that you can actually trade it, you can actually buy it or sell it like a stock, and you can watch it in real time, the value of the stock, on a daily basis on the market. So any time of day you want to look, just like a stock, the value of the stock, you can see it going up and you can see it going down. So when you sell it or buy it, you can buy it or sell it at that exact time, at that exact price. With a mutual fund, if you sold a mutual fund, or if you have someone sold it for you, you know that you don't see the value of the mutual fund for that day. You see it for the close of the previous day. And then when you sell it hoping that it's going to sell at a higher price than the day before, but you don't see what's happening throughout the day, okay? The ETF, or the exchange traded funds, like I said, you can see that through any point of the day while the market is open. And so sometimes day traders like to use ETFs, not always obviously, it's not just for them, but I'm just saying it's one of those things that it diversifies. It's not like one stock or which is just one company where you're putting all your eggs in just that one basket. You're still diversifying. It's through an index, and you're diversifying the risk, which is, yeah, for an ETF, because it does trade like a stock, you also have to pay a commission for it. Depending on where you purchase your securities, if you say have an online account or maybe you go through an advisor, that commission can be either rather small or very steep and prohibitive. But depending on how much you can pay for a commission, you can buy an ETF. The management fees are relatively low. We're talking 0.1, 0.2% compared to, say, an A share, which is 0.6, 0.7%, compared to a C share, which might be 1.4, 1.5%. Let me stop and say, I'm not giving you investment advice. I'm not saying you should do this. I'm simply saying this is something that's very, very interesting, and it's an alternative to mutual funds. I think you need to be a little bit more sophisticated as far as being either if you're going to be doing this yourself or talking to your investment professional, whether that's a financial advisor or whoever it is that you work with. But it's not as well known as the mutual funds. Why is it not well known? Well, the companies, let's say the big financial institutions, especially the ones that the financial advisors work at, they get a percentage of the amount of money that is charged on those annual sales fees, whether it's the 1.4% or the 0.6%, or this thing called wrap accounts that are becoming so popular now. That's how they make their money. But with an ETF, it's just basically the commission, the sales commission in, the sales commission out. So they're not going to be pushing ETFs on you because the financial companies don't make money on it. But again, there is the initial cost in and initial cost out if you work with an advisor. That may be steep depending on who you work with and how much you're going to be investing. Also, depending on how much your online broker is charging you as a commission for a purchase of an ETF, and depending on the amount that you would be purchasing. Again, these are all things to consider. Am I saying you should go out and buy ETFs? I am not. I am not giving you any investment advice. I just truly love the markets. I think it's fascinating as long as my money's not in it. I just like the different concepts, and I think it's fascinating. Also, because I used to be in the markets. I used to be that person you used to go talk to, and I'm not anymore. I know a lot of the ins and outs. And when I was working there, I couldn't tell you the ins and outs, but now that I'm no longer working there, I can be a little more liberal as far as my ins and outs that I want to share with you. So again, depending on how much time you have to invest, pun intended, in the research to look at these different financial options for you, whether it's a mutual fund or an ETF, the key is going to be research. Don't blame other people for putting you in a bad product. All right, if you buy a mutual fund, you should know what's in the mutual fund. If you buy an ETF, you should understand the index. You should understand what it's mirroring. You need to do the research, okay? I'm just going to wrap up with that. I am not giving you financial advice. I am giving you information. ETF, it's a very interesting product, mirrors the index. Sales commission in, sales commission out, depending on how much you're going to pay where you're currently buying your financial products. Maybe it makes sense for you, maybe it doesn't. The management fee, low, 0.1, 0.2%, much lower than the mutual funds. ETFs suggest that you do a little research on your own. Very interesting product. Might be better, it is better, for those who are willing to put more time and effort into researching. And again, how much you're going to pay in commission. So just something else to think about, another possibility for your investment toolbox. Hope all is well. Hope this helped. You take care.